To really put everything in perspective that we saw from an economic standpoint and from the performance in the asset classes during the second quarter, you really have to go back and look a year ago, even just 6 months ago. It would be very difficult to find someone who would have thought that by the end of the second quarter that we would have recouped all of the losses in GDP that we had during the pandemic. There'd be very few people who would tell you that we would have been able to gain back 70% of the jobs that we lost during the pandemic, or that we'd see job postings right now at a record high. All of these things we were able to achieve in the second quarter because of the accommodative monetary policy, the aggressive fiscal stimulus, and the fact that the vaccine rollout that was really slow to start picked up pace. And by the end of the second quarter, we had fully vaccinated almost 50% of the US population. So what did we see through the second quarter from the economic standpoint? We saw that pent-up demand that we've talked about. Air travel returned. Consumer spending, very robust. We saw people, instead of buying furniture or electronics or things for their home, they shifted their spending to more service-oriented things, spending on that leisure and entertainment, getting back out that we've all been wanting to do. So what you can see in this chart is that at the start of the second quarter, the expectation for GDP this year was about 4.9%. Well, now by the end of the second quarter, because of all this pent-up demand that we saw, we're now looking for GDP for this year around 6.6%. What we saw from an asset class perspective was that investors really celebrated this much better than expected recovery in the economy. You saw the equity markets rally for the fifth consecutive quarter, but what's most important is that you started to see participation also from a global perspective. So some of those areas that saw their economies reopen, vaccines pick up, like the international developed markets, they also participated in this rally. Where you can really see the benefit of the pent-up demand was in the commodity sector. And as you can see on this chart, that the commodity sector delivered some stellar returns as the material prices rose, energy prices rose, all of this to satisfy that pent-up demand.